Hello, everyone. My name is Gev. I hope you guys are having a great week. It's Friday, April 8th, so let's talk capital. So let's start with the S&P 500 again, and we're going to look at this on the monthly chart first. So I want to explain to everyone why we're seeing this move higher, and everybody thinks the bottom's in for this crash, and I honestly don't believe it is. Okay, the reason why we're moving higher on the S&P 500 and looking more bullish on the S&P 500 than any of the other indexes is for one simple reason. Okay, as we can see, all of these candles, okay, where are the bodies of the candles closed? Okay, they're closed in this range right here, right? Most of the candles have closed in this range. Okay, what does this tell us? This tells us that this range is very powerful as far as the bottom goes, right? And that's exactly what we've seen. We've closed candles here, moved higher. Okay, we closed in 2018 when we had that crash and everybody was calling for a bear market. We closed the candle here, moved higher. Okay, and that's exactly what we're trying to do today. Okay, we close the candle here and we're trying to move higher. Okay, and this is on the monthly chart. Okay, so basically what this tells us is they're trying to keep the uptrend alive, right? But this monthly candle is still live, so things can change. Okay, so let's move to the weekly chart on this. Okay, as far as we talked about last video, as I said at this video, if this candle closes above the weekly 200 moving average, we could definitely see a move higher to the 2850 to 2950 area. Okay, and that's probably where we're going to see next week. Is we're going to see a move to this resistance level at 2850, and then what we're going to see is a move back down to this weekly 200 moving average sitting at 2650. Okay, why this move to me is not a real bullish move is two simple reasons. One, we saw such a dramatic fall from our highs at close to 3400 that because of such a violent fall, we're going to see moves higher like this. Okay, so we saw a 38% fall and we're sitting at almost 30% rally to the upside. Okay, but this reason number two, this rally is happening based on just information that just doesn't line up with a bullish move. So we had record unemployment coming in so far. Okay, we were expecting 5 million claims. We got 6.6 million claims. Okay, and this move higher is on lower volume. Okay, so we're seeing higher volume on the way down than we're seeing on the way up. Okay, that's not a healthy move higher. Okay, this is a tech textbook bear market rally. Okay, we're seeing a textbook bear market rally. We're seeing moves higher on decreasing volume. That just doesn't make sense. Why would there be less participants on the move higher if we've already bottomed? More people should be jumping in and excited about us going back up to 3,000, 3,400, possibly even 4,000, right? But that volume signature just isn't there. On top of that, look at the unemployment claims that are coming in. This article is old. It's about 15 days old. It's from March 26, 2020, but look at this graph. Okay, we're looking at the 70s, 80s, 90s, 2000s, and the 2010s, right? These are all the recessions that took place. This is all the unemployment claims that came in during that time frame. Okay, this is today. Look at where we sit today, and this, like I said, this is an old article, so we're even higher now, right? Look at where we sit today compared to what has been going on here. Okay, we're like four times the number that we were in 2008 right now, and it's only been 3 to 4 weeks. Okay, so in 3 to 4 weeks, we already have more unemployment claims coming in than we did in the entire 2007-8 recession. That can't be good. That's not easy to come back from, and which is the reason why this move on the index is just it's irrational. Okay, this is an irrational move, but we're ready for this. Okay, as far as the Dow Jones goes, Dow Jones looks unhealthy, more unhealthy than the S&P 500. Okay, we did not close the weekly candle above the 200 moving average. We closed right at it, and we closed right in the middle of this resistance channel we were talking about on Wednesday. Okay, so this guy has room to move down now. Okay, whereas S&P 500 could move up, he Dow Jones has room to move down. Okay, and again, we're sitting in this massive area of resistance. Okay, there is not much resistance up here. Okay, but there is a lot of resistance here. So for us to climb back through this, it's gonna be difficult. Okay, and we're setting lower lows. Look, we had a low here that helped us rally. We put a lower low and rallied, which is that whole V-shaped thing you guys hear everybody talking about on the news. We're gonna get a V-shaped recovery. This was your V-shaped recovery. Okay, and it doesn't happen all the time. Okay, we got one. We're gonna get another one. Highly unlikely. And not only are it's unlikely that highly unlikely that that happens. We're trying to get another V shape on a lower low setting. Very unlikely that that happens. S&P 500 set a lower low too, but it's a little less dramatic than the Dow Jones is, right? Russell 2000 looks the worst out of all three of them. Russell 2000 set a way lower low. On top of that, it came down to a support level of 2016. And on top of everything, it's trading below all of its previous support levels, which means this entire range is now resistance. Okay, and we're nowhere near the 200 weekly moving average. Okay, so these are all the small cap companies in the United States on the Russell 2000. Okay, and they're not performing at all. Okay, and you know that if you own a small business, your business probably isn't doing that great right now. Okay, and this is basically an indication of that. Okay, gold has been the play so far during this entire uh, virus situation. Okay, on the weekly chart of gold, we're looking very nice. Okay, so we came back up to this 1676 level of resistance we've been dealing with for the past 5 to 6 weeks here. Okay, we had a nice recovery coming off of that 1450 low that we set on the weekly. And as you guys remember on Wednesday, we talked about if we can find support at this trend line, then I'm long on gold. And that's exactly what happened. We found support, we longed, and we exited at 1676. Okay, it did move higher, but that's fine with me. We took profit off the table, and we're ready for the next move coming Monday and Tuesday. We just need to see what direction it moves in. Okay, as of right now, I don't like the 4 hour close being a doji up here, but we'll see what happens on the open. We might retrace back down to this high, to this top right here at 1665 and then continue higher. But again, like I said, we got to see how the market wants to move and what news comes out over the weekend to see what direction we want to move in. Okay, Bitcoin, we talked about our support and resistance trend lines that we were dealing with. Okay, if you guys remember, I think we were here on Wednesday's video and we were talking about how this resistance trend line comes all the way back from the 10,500 top that we set. So every time, one, two, three, four, now 5 times we've battled with this trend line, we've lost. Okay, and we lost again. Okay, which means we broke our uptrend too. So basically, what we're looking at on the 4 hour for Bitcoin is for Bitcoin to come down and most likely test the four hour 200 moving average, which is right around 6,400, which sits at historical support for Bitcoin. 6,400 is a very powerful number for Bitcoin, guys. Okay, so we see that we've rallied off of it here recently in November of 19, and then in December of 19, ultimately setting an inverse head and shoulders pattern and pushing us back up to 10,005. Okay, we see how in 2019 in May, when we started our bull move to 13,900, we also saw a brief pause at 6,400 right here before we saw the ultimate move higher. And going all the way back to 2017 and 18, we see how powerful this 6,400 level is. Okay, we continuously come to it and bounce hard off of it. Okay, we held 6,400 to 6,000 for months before we broke down below it and set our ultimate bottom at 3,100. Okay, so I'm expecting 6,400 to hold here and for us to continue this move higher to the 8,000, 9,000 range and come to our ultimate level of resistance here at about 8,700. Okay, we're going to have a crucial thing, um, crucial moment for Bitcoin right around 8,000 to 9,000. Okay, we're now about 30 to 35 days away from the halving event, which, if you guys are paying attention to, that's basically when Bitcoin's uh, supply production gets halved. So we have half of the number of Bitcoins being mined every day compared to what we're having now. And if you understand supply and demand, as long as we can keep supply I'm sorry, as long as we can keep demand at the current levels, when we reduce the supply, that should be a big shock for Bitcoin's market. So prices should move up, but again, we're waiting to see how all of that develops. Okay, guys, if you guys like this content, please like, please subscribe, leave a comment. Let me know if you guys think the bottom's in for the market so far. I will be making another video today, and I'll be talking about a couple of our favorite stocks and if they've bottomed and what the short-term, long-term predictions for that is going to be. Um, keep a lookout for that. Until then, I hope you guys all have a great weekend. We'll be back on Monday to do a little check-in with the markets. So I'll see you guys then. Thank you.